And it's time now for the business news with Nicholas Poynton. Nicholas, let's start with Genesis Energy, and it's sounding a warning over calls to make the country 100% renewable energy. I can only assume it's on the back of the government announcing this plan to look at a massive dam.
Correct, yeah, that's right, that $30 million business study. So the project has been put up as a way to sort of provide electricity in those dry seasons or dry years. But Genesis is questioning the value of such a scheme because of the exorbitantly high costs associated with constructing the dam and for what they say is very little gain. The chief executive of Genesis, Mark England, says the remaining emissions in the electricity sector is actually relatively low. They account for about 4% of the country's emissions. And he says the industry is already underway to becoming 100% renewable. He says, given that tackling emissions is a huge priority for this government and for future governments going forward, he reckons a lot more could actually be achieved if we looked at reducing the carbon footprint for the whole economy. So not just focusing on one sector. A good place to start, he says, would be electrifying the car fleet. That accounts for about 21 to 22% of the country's emissions. The other would be maybe electrify those industries that rely on industrial heat. So I'm thinking of like your coal burners,
Fonterra, for example, who is phasing out, but...
Yeah. Exactly. So, those burners can be electrified, but there actually are significant barriers when it comes to actually upgrading the total system so you can electrify them. So they're saying that, Genesis is saying that instead of maybe taking this quite, what they say is a narrow focus, we could actually probably get more bang for our buck when it comes to investing and reducing emissions by focusing on maybe, the economy at large. And coming off the back of this announcement, they said today, Genesis's share price actually fell 1.4% to $2.88 a share.
Okay, interesting. Court of Appeal, there is a hearing there, and this relates to the failed construction firm Mainzeal. It's just got underway. Is this to do with the directors, Nicholas?
Yeah, so quick recap. This is to do with the directors of the failed construction company Mainzeal. Among them is the former Prime Minister Dame Jenny Shipley. So this company went bust back in 2013. They owed its creditors $110 million. Last year they were in court. The liquidators actually took them to court, and the High Court ruled last year that the company's directors were reckless for continuing to trade while the country was insolvent for about 9 years. And the High Court ordered the company's directors, which includes the former PM, to pay about $36 million, hence why they've appealed. But they're not the only ones appealing, actually. The liquidators are also cross-appealing. They're demanding that the penalty should in fact be doubled to $72 million because they felt the original one wasn't actually
So it's a risky
enough.
roll of the dice, really.
Yeah, and there's actually a third appeal from the fourth director who was ordered to pay $18 million. So there's a lot going on in this case. Today we heard from the lawyer representing three of the directors. That includes Dame Jenny, that's Jack Hodder QC. And a lot of what he was saying hinges around that High Court's decision, which said that the company should have ceased trading midway through 2010 after it went through a restructure. Jack Hodder QC says the court made that decision with the gift of hindsight. He says the directors at the time, they weren't being reckless. They were doing the best that they could with the information they had available to them, and they were also operating under the assumption that their parent company, which actually owed them money, was going to pay them out. He also says, this is quite an interesting point, that this High Court judgment sets a bit of a worrying precedent because it could mean that directors of failed companies in the future may have to pay creditors out of their own pocket. And he says the flow-on effect of this could be that New Zealanders, or rational New Zealanders, as he said, could be deterred from actually becoming directors in the future. So, the Court of Appeal did respond. They did say there were significant flags that were raised throughout the life of this company, and these directors were responsible for building it. They can't get away from that. So we can expect a lot more from this story, from this court case throughout the rest of the week. It's got about 5 more days left. We're going to hear more from the liquidators as well as the fourth director who has separate representation.
Okay, you'll keep us posted on that, no doubt. What else has been going on the markets today?
So today the NZX Top 50 is down just under 0.5% by 51 points to 11,585. The New Zealand dollar is up nearly 0.5% to 66.7 US cents, steady at 93.6 Australian and steady at 52 British pence. And a special mention to gold. The yellow metal continues to soar up to $1,931 an ounce.
Wowza. Thanks, Nicholas. That's Nicholas Poynton with our business news.